And Vic Pascucci is here from Energy Venture Partners. Maybe Vic, you could just give us a little bit of your background and go as far back or as recent as you want as far as your career, and would love to hear it. You've made so much, like such an impression on the venture community here in Chicago, just being involved for as long as you have been. I kind of look at you as the godfather of venture capital here in Chicago. But yeah, please introduce yourself and go, like I said, go as far back with your experiences here in venture as you want.
Sure. Thanks, Mike. I appreciate it. Appreciate you guys having me and everyone else joining and listening in. So I'll go back pretty far in my career, only just to because I think it gives everybody a little bit of the perspective on how I view things and why I have certain biases or balances on things as well. And maybe it'll spark some other conversations later in the call. So I had actually started my career as all things as a lawyer, believe it or not, as a trial attorney. And so, early in my career from trial law to litigation, and I noticed, I was spending all my time screaming, yelling, fighting with people and tearing things down and destroying them as a lawyer. And at night here in Chicago, I go to these technology events and meet these people that were really happy about what they were doing, really excited, were building things. And those tend to be the entrepreneurs and the investors in those companies. And so I said, that looks a lot better than what I'm doing. And so the only way I knew how to get from where I was to there was to start my own law firm representing technology companies and investors in those companies. So I started my own law firm, started working in the state of Illinois. I was in the investment committee, the very early state efforts in venture investing. I was on the investment committee for the Illinois Development Finance Authority. During that time, like every other person starting their business, you're just hustling and grinding and trying to get business. One of the guys I was haranguing for 2 years to get his business finally said, no, I won't give you my business, but I will recruit you as my first general counsel and head of corporate development. So that brought me into software companies where I helped him raise money, build sales ops, all those types of things. Raised a bunch of capital, both locally and nationwide from some funds. We sold that company to a company in all places of San Antonio, Texas. Ended up going to San Antonio, being general counsel, head of corporate development for that company. We sold that off in a couple of years. I got recruited by USAA to be the general counsel for their, basically the general counsel for their CIO, CTO, CISO, and head of business operations. And, that was my first time transitioning from kind of that sell side, small company guy to big company, Fortune 100, which was completely eye-opening for me. And then, during that time, I would see USAA as the early adopters of these technologies and business models, like selling cars online and desktop virtualization. And so I'd keep needling them and poking them, saying, hey, we need to do deals with these companies. To which their response was, typical big company, well, we are. I'm like, no, you're just buying things. You should invest. They're relying on you. You're relying on them. These are major initiatives. Why don't we start putting some money to work and really align with these companies? To which they said, nope, shut up. Don't talk like that. You'll get fired for that around here. I said, well, I'm probably getting fired anyways. I don't really blend with big companies. Let's do some deals along the way. And lo and behold, they let me start doing deals along the way. So did a deal here, did a deal there. People started getting happy about that. I had another role within the strategy and transformation group. We started having IPOs. Business folks are happy. They said, here's $100 million. I said, fine. Then we had more IPOs, more happy business people. We started selling companies. And then they said, here's $330 million. So I ran that for about 10 years, got to do deals across the fintech spectrum, covering insurtech, wealth management, as well as banking. Companies some you guys might know well. Coinbase gets a lot of fanfare. We're the second largest check in their Series C. Coinbase, MX, which you saw just raised $300 million, is now close to a $2 billion valuation. MX, my favorite Army Ranger, Blake Hall, if you saw yesterday, he just raised $100 million at a $1.5 billion valuation. Personal capital, we did TrueCarCare.com. You can go on and on. Kind of had enough of living in Texas for that time and knew there were some other broader horizons out there. And I'm going to Munich Re in California, where I did Munich Re Ventures, where I got to invest in other on both sides of the pond and do some great insurtech deals. Companies like Trove and Slice and Super, bought by many. to name a few, and then got the opportunity, thank God, to bring my wife and kids back to Chicago about 3 years ago, where I spent the last couple of years managing an early stage venture fund that was here. Got to do a bunch more in fintech. We did ClearCover, local company here, you guys are probably aware of, did Extend in San Francisco, the product warranty company. You just probably saw a bunch of press on them. And then also came back to work with the Snapsheet guys again. So spent some time with them as well. And then at the beginning of last year, started to look at what was going to be next, and ended up forming this fund called Energy Capital Ventures, which we've been out for the last year or so raising, and it is in the power and utility space. And everyone said, Vic, what the hell are you doing in that? You're kind of like the insurtech, fintech guy. And I still keep my hand very active in insurtech and fintech. I work with IA Capital. I do some work with Great Point Ventures and Crosslink. But kind of if you step back and look at the broad macro on things, the power and utility space is going through the same innovation cycle that financial services went through 15 years ago. It's the same thing. And the funny thing is, if you look at those macro conditions, they're dealing with, like you'll appreciate this, regulated industry, risk-averse culture, aging infrastructure, customer satisfaction issues, new entrants coming to their market, new technologies threaten to either enable them or disrupt them. What is that? It's like financial services, however long ago. And if you pick apart the portfolios of these quote unquote energy or clean tech funds that are around now, you'll see it's, insurance for rooftop solar, it's financing for wind, it's trading technologies for trading futures contracts and energy, it's cybersecurity, it's cyber insurance, it's straight enterprise SaaS. So after spending about a year with executives at some of the largest utility companies, got to see a lot of those trends and feel their pain and realize they needed an advocate to help them, especially the smaller utility companies and the local distribution companies, the companies that are more on the natural gas side, because they're being completely overlooked and they're getting lumped into this whole thing of fossil fuels are bad when actually renewable natural gas is not, and what they're doing in hydrogen and green hydrogen and to help the energy transition for this whole country is actually really important to a lot of people and can keep things going. We saw some of the bad things that happen in Texas when electric and wind doesn't work. So that's kind of some high level of where I came from and kind of where I'm spending my time now.
Yeah, no, that's great. It probably would have been easier to say what you haven't accomplished and done within the venture community. It's awesome. And yeah, and the Coinbase, being the second largest check in their C round there, that's amazing that, you guys had the foresight to invest in that when you did. And it seems like there's some foresight again, how you were kind of mentioning the parallels between the energy space and what you've learned in the fintech space. Mm-hmm. As you were describing that, I was having flashbacks of being a pit trader in the open outcry market, and wow, did that go away fairly quickly. But with your energy capital ventures, that's something that looks like it was well thought out pre-COVID lockdown. And how has the COVID lockdown either accelerated or decelerated, like what you've been seeing in the energy space?
On the fundraising side, it definitely presented challenges because we were literally on our roadshow March 13th of last year, like going from Duluth to Phoenix to Columbus to Detroit, like we were in the middle of it. And so meetings started getting canceled. We had made the decision to first raise money from the industry to get their validation of what we were doing. And then after that, go after the traditional allocators to have kind of a balance, but we wanted this fund to be by the industry for the industry type of thing. And what happened was COVID hit them, their revenues plummeted by 25%. And they were looking at what we're doing and they understood the ESG implications of what we wanted to do as well. And so everyone said, this is great, let's just keep talking. We'll go to our board again, but we don't know when we'll actually be able to allocate. So it definitely slowed things down. I think at the same time, we're trying to build a pipeline of investments and talking to companies also, but at the same time being very upfront with them that we hadn't had first closing, but we're looking to make introductions to our potential LPs and those types of things. And, we saw just great entrepreneurs do what great entrepreneurs do. Like, they knew that there was going to be a challenge. They tightened up their belt and decided how they're going to leverage this thing that we were going through to improve their business and validate their value proposition. So I still saw a lot of great companies and still see a lot of great companies that have pivoted in the utility space because they knew if people are spending more time at home, that they're going to be consuming more utilities. They understood that the commercial industrial side, that they were going to be taxed, so you had to give them greater efficiency plans. They knew that, the civic side of things as well, that the municipal-owned utilities were going to require additional support within their systems to bring efficiencies. And then at the same time, the companies themselves were looking for ways to better endear themselves to their customers. So, the importance went up, but so did the difficulty factor of trying to raise this fund.
Yeah, I mean, it seems like anybody raising funds at that point was impacted. How has it changed in the last several months? Has there been any connectivity, positive feedback, like things picking up at all?
No, we've definitely seen a trend in the last couple months. So we started to see people, executing letters of intent. We saw people saying, hey, can you come back? Can we talk to the board? Will you come meet with some folks? So we're starting to see things really come to market. And it's really taken, it was the last 60 days or so when we started seeing things really come in and really come back. So 60 to 90 days, let's say.
That's great. Yeah. And it's great to hear, things coming back in the venture space. And, it kind of makes me feel better because we were fundraising last year. Yeah. We don't have nearly the breadth of experience that you had, but we were having a difficult time getting meetings from March to June last year. So it sounds like it
was super hard. It was super hard to everybody. It didn't matter if you're raising for corporations or institutions or high net worth individuals. It was just hard, right? And it made, the bar was always high. It just raised it more. And then there are only certain conversations all these folks were going to have. Like, I think a lot of them from the traditional allocators that you were probably talking to, or the high net worth individuals, like, they didn't know if they had to redeploy their capital to their existing commitments as opposed to make new ones. They didn't know from the family offices if they just had to bring it in because they didn't know what was going to happen to the underlying principles. There's a lot of uncertainty, and there still is. So, I think maybe, Mike, you appreciate this. I'm sorry to take us off tangent. Like, a lot of entrepreneurs don't realize that, like, venture capitalists have to raise money too, right? And it's like, we have to go out there and hustle and grind, and it's just not given to you. And it's, I think it's part what enables kind of the folks like you and I relate to our entrepreneurs, because, we're out there hustling and grinding, trying to make things happen as well.
Yeah, for sure. There's definitely been lots of peaks and valleys of uncertainty here in the past year. When you talk about energy and, the way you set the table about how you're taking, how you drew the parallels with fintech and energy, the way you see it is energy set up like 20 years ago. What comes to mind is the recent like weather across the Midwest and the deep South in February with like the way the energy grid was set up in Texas. Are you guys looking hard down there because of what happened in Texas in February?
I think that there's this macro thing that everybody equates because of certain misinformation. Like, everybody equates decarbonization to electrification. The fundamental reality of this country and this world's energy infrastructure is that it cannot handle the electrification requirements of everything, right? There needs to be, I'm not saying you should use fossil fuels either, but like, here, like in Montana, right? Take Montana, it went down to 39 degrees below zero, right? No windmills were working, no solar was working. And that's what they were using to try to power the electric plants. So the grid isn't strong enough to handle electrification requirements of everyone driving an EV and taking houses and buildings off gas into electric. It just doesn't work. So that really helped us kind of raise the conversation and set the narrative for the local distribution companies that are responsible for distributing natural gas to these buildings and commercial facilities and industrial parks as well, because people are like, okay, yeah, maybe, the narrative around decarbonization is equal to electrification doesn't work. You know, you have the biggest wind farms in the world that are there in Texas. They couldn't keep things going, right? You have states that have decided to pick the utilities they want, like California picked electric. Okay, congratulations. Welcome to rolling brownouts. So you have no power, right? And that's before the fires, right? That's before EVs come to a price point that the average American family can afford one, right? And it's just, people have been very short-sighted on their thinking, and they don't realize that there is such a thing as renewable natural gas and green hydrogen and blue hydrogen that takes like zero footprint and is more affordable. And like, you know, I love the people, I'm sorry, I'm probably going to offend some of our listeners on the West Coast. Like, if only 2 houses in Atherton can afford the electrification plan you are putting forward, it doesn't work, right? It's got to be something that works for all geographies, all income levels, and can you know, sustain the needs we've got. So it was a big eye opener for folks, and we're hoping to help those companies that got left, quote unquote, left behind by this innovation cycle, to bring them forward and give them a kind of a platform through ECV, Energy Capital Ventures, but also make sure we're exposing them to all the technology that may be relevant to their businesses.
Yeah, no, that's interesting. And you're making solid points. There's, you know, the practical side of what is going to work for the masses. You know, sounds like it has to be a hybrid of some technological integration and some innovation. As far as your fund and your focus, with geography, like as it pertains to geography, do you have limitations to geography? Are you looking globally? It seems like the world keeps getting smaller and smaller, and things that happen in France affect what could happen here, especially, I mean, it's probably really highlighted with this pandemic with international travel. Are you guys focused on any certain geographies?
Yeah, with our limited partner prospects have asked us to take a formal, a more global approach to things. In fact, within our documents, there's a split that, you know, up to 30% of the fund can invest internationally if it's relevant to, you know, the things that are going on here. And the reality is, especially within the renewable natural gas and the natural gas space, what we're seeing in Australia, what we're seeing in Germany, what we're seeing in Asia, is super relevant because some of them have learned these harsh lessons of you can't electrify everything. And there's a right way to do methane capture and you know, the right way to do leak detection and make sure things are safe and affordable. So we are going to look internationally to bring some of the best technologies here for these companies to leverage, and then also just giving them the broader exposure.
That's great. Yeah, I mean, that's awesome that the focus has that 30% feature. You know, it seems like 15 or 20 years ago, if you said something like that, that you had a global focus, it wouldn't seem like that would have floated 15 to 20 years ago, but it's good to hear you do have that exposure.
Yeah. And I think also one of the, you know, benefits, silver lining through all the COVID things we've been through is like, when it came to those international calls, people were like, yeah, let's just do a Zoom. Like, you don't have to thank God you don't have to fly to Vienna. They're like, oh yeah, let's just do a Zoom. Now it's some interesting hours that we have to do things, but it's like fine. You know, people can deal with that. And they'll keep pretty crazy hours as it is. So I think that's one of the benefits, is that people are more open to establishing relationships through Zoom, web conferencing.
What are some of the higher arcing trends, you know, without giving anything away, but you're like looking at it in the weeds, like what are the big movers in the energy space right now, as far as like the overarching trends that you see moving the needle?
Like the overarching trend and kind of the backdrop for everything is the ESG implications that are there. And there's really kind of, it's really important to these utility companies. It's really important to their constituents. And the reality is everything they touch does have some type of ESG implication to it. So that's kind of the backdrop of it all. And then there is a lot around like workforce safety, right? Because they got people in the field, they got people digging, they got people in tunnels, they got people in pipes. Like, you want to make sure, whether it's an IoT device or whether it's like an ML or AI algorithm to detect potential issues, like all those types of things are really important around workforce safety and predictive maintenance. We're seeing a lot around like pure decarbonization and technologies and software that's being evolved, coming up through that. And then there's a lot within kind of the customer advocacy, because, you know, similar to like, you know, our space, Mike, in financial services, like these companies never really had that customer relationship, right? It's just like you picked up the phone, you connected your building, you connected your plant, you connected your home, whatever it was, and you never really talked to the utility company, right? So helping them look at things like IoT, helping them look at things like CRM applications to better establish a relationship with their customers is really important from that aspect as well. And then giving them some of the fundamental like bill payment and bill diagnostic technologies that we use in financial services. So, you know, when people, kind of that other side of ESG, like when their customers are having a hard time and are likely going to have a hard time paying their bill, like reach out to them, restructure those payment plans, restructure things, like those types of things have been really important, really exciting too.
Really interesting. How did you feel like transitioning like from financial services venture, you know, with that focus in insurtech and fintech into energy tech? Is there team members, other GPs or advisors to your fund that have subject matter expertise, or have you picked up this subject matter expertise within energy? Like, how have you handled that transition or drawn the parallels to understand the energy side to explain to the LPs why they should invest?
So be clear, like this transition scared the hell out of me. Like it completely scared the hell out of me. And anybody that says, oh no, it's easy, and I did, like they're lying, right? Like to leave like the safe spot I'd been in 20 years where like you felt pretty good about it. Like you can go super deep in topics, like, you know, like really into the weeds on underwriting and pricing and everything and actuary and those types of things. To leave that comfort zone and that network and say, okay, I'm going to apply my craft and everything I learned to another sector that I think needs help. It was scary as hell to me, and pretty uncertain. The good news is the partners I have in this, like Jeff Ingling is a 35-year investment banker in the power and utility space, like has been in this space forever. He's also on the board of a utility company. That was super helpful. Our senior associate, Stefano Galasios. Stefano is an energy engineer. He's got like degrees I can even barely understand. On top of that, he gets an MBA from University of Chicago, and he worked for our friend Nick at New Stack, right? So he kind of helped out, you know, on that technical side. My other two partners have both been long-time investment bankers in this space. Ray O'Connor and Rick Fatone, and Rick and I had worked together and done 2 deals in the past. So Rick kind of brought us all together. So leaning on my partners that had been in the space their whole career was super helpful. And then our advisory board is a collection of executives from the industry and retired executives from the industry that were EVPs and CFOs at energy companies, as well as people that lead consulting practices at one of the largest consulting companies in the energy space as well. It's got 800 consultants working for them. And then on the pure technical side, one of the good things about being here in Chicago is we were able to get a relationship with GTI, the Gas Technology Institute, up here in Des Plaines, which has a couple hundred people working for them. And it is, at the end of the day, call them like the think tank and experimental lab for the gas industry, right? So David Carroll is one of our advisors. He's the president there. And so they're helping kind of augment what we don't have in technical, deep technical expertise that's there. And then it's like kind of everything else, like you just realize you got to go as deep as possible as you can and study as much as you can. And always kind of be smart enough that it's kind of like, even when I was in financial services and fintech and, you know, you've been investing in it for 10, 15 years, like there's always some guy or gal that knew more, right? There's always some lifer actuary or some executive that born and bled into the industry that always knew more. So it's like everything else. You just do your homework and realize that people will always know more, and you just, hopefully they help you out along the way.
Yeah, I mean, that's impressive that the team has that experience in the energy field. And then you bring the legal and then the expertise of being in venture for 15 plus years. That, do you think it helped that the whole world changed last March when the lockdown happened and energy business kind of changed maybe arguably the most?
Yeah.
And the whole world looks different and there's different opportunities, and we have no data points to go back to say like, hey, Vic, the last time we had a global lockdown, how did it affect the energy markets? Do you think it's a blessing that you've surrounded yourself with these people? That's an obviously blessing, but the fact that you're new to the energy or newer to energy, but have this different viewpoint to where opportunities lie, do you think that's like
I think it was a blessing.
Yeah.
Blessing, but in a weird way, in a way like I didn't expect it. Like, because my partners Rick, Ray, and Jeff have been in this industry, like they're very trusted partners to these CFOs, right? And we all joke about investment bankers, but like these were true like relationship professionals that these executives would come to when they had a major transformative either deal to look at or analyze or speak to the board about. So there was something super helpful about that. And it was funny, the executives, like, we're VCs, and so we always kind of like throw it out there, like, I've got a 5.6 MOIC now and a 54.8% IRR. They could care less. They could literally care less about my returns. Now, granted, the CFO's in the corner saying, yes, I care about your returns, but like the executives really didn't care. They're like, tell us what it was like when you first brought cryptocurrency into financial services in 2014. What was that like? So they really took more comfort in knowing that I had been through these innovation cycles, both hype cycles and reality cycles, and that would provide them kind of a level of support and understanding to get through, because they're kind of facing this. And so, the blessing was like, they just wanted to understand, like, how did I do what I did? And like, what was it like to work with, global 100 companies and Fortune 100 companies and then startups, and really help them understand, like, what does it mean to integrate with one of these companies and work with these companies? One of the best practices to really do something with an emerging company or a startup, and, those types of things. And so that was really kind of the surprise to me. Like, you think like people just care about numbers and returns, and sure, that's important because no one wants to lose money, but at the same time, they wanted more. Like, they really wanted more of what's important to them.
Well, it shows you that they respected the fact that you had that experience, and they wanted to draw that analogy of like, what was it like taking this, what is viewed in the public as like a gambling monopoly money Ponzi scheme in cryptocurrency to it's adapted. What was that like getting those early, adopters? What that triggered my curiosity. What was that like? What was being an early investor in Coinbase? Like what was that like?
At the time, it was like not a comfortable thing, because there were people that really thought like, you're going to take down the firm, you're going to take down the company, that stuff. And this is like in the height of like Silk Road and like, Mount Go, and like all the pariahs like kind of coming out of the woodwork. And they're like, what's wrong with that guy? He's going to take down the firm. That's stuff for criminals. Has risk management looked at this? Has fraud looked at that? What's compliance going to say? And so it was a rough time of it. But then like, people's emotions kind of go through their cycles, and then you kind of show them what this could mean to the industry, and then show them what it could mean to the actual members of the organization and what they're really doing with it now and where it could go. And that got better. And then like, now, I look like this genius investor because of, Coinbase is going to go out at like $100 billion. It's going to be the largest direct listing in the history of the NASDAQ. And, obviously at the Series C, it was exponentially cheaper. So I think it was like helping people understand like potential innovation cycles, and like, what does it mean from a hype cycle? And what does it really mean to your business? And how to dissect the two, right? And kind of divorce the emotions from it to look at like, what's the fundamental business impact this will have in the short term and could have long term, and what's the right way to engage, right? And so there was a lot of that, but there was the same thing like with like personal capital and quote unquote robo advising, right? That was like, oh, what's wrong with you? That'll never work, and no one wants to listen to a computer as to how to invest, and going through all that. It was kind of a lot of the similar things.
Yeah. And what are some of those like new challenges in the energy space like that you see? Is it convincing people that are on fossil fuels to completely switch to solar? Like, what's the cryptocurrency in the energy space, so to speak?
Yeah, I mean, I think crypto, like the energy space is just dealing with like this macro transformation. If you think about it, there's like generation of power, generation, and then there's generation, transmission, distribution, and then there's the customer, right? And all the value in the system and that value chain is all around generation and distribution, transmission. The reality is all that value is going to switch to the consumer and behind the meter. And so you're going from like energy as a commodity to almost energy as a service. And so, customers, whether you're a homeowner or an industrial complex or a commercial building, you're expecting more from your utility providers. They want to know that you're looking out for them. They want to know that you're providing them the optimum savings, and they want to know you're providing the optimal safety as well. So getting people to focus on, you have to still focus on the fundamentals: safety, reliability, consistency, but then you've got to focus on the newer things around ESG implications around things. So, how do you take your existing infrastructure and realize maybe it's not going to work going forward, but part of it is. So how do we dissect what's there? But if you look at kind of the technologies that are there within it, like the things around biofuels and green hydrogen that I mentioned before, and blue hydrogen, renewable natural gas, those are the important things. I mean, the reality is a renewable natural gas will be more affordable and more efficient than an electric car, right? And it's just going to it's like getting people to understand those things. It's kind of like telling people that this thing called Bitcoin may be worth more than anything you own right now. So maybe you want to own some of that, right?
Yeah. Steve, thanks for that, Vic. Yeah, and Steve just typed in, asked about, have you looked at anything in the Lenr space, LENR space, or is it all vapor science?
I'm not sure if I have, I'm not sure what the acronym is. So
we'll let Steve chime in here. Cold fusion.
Yes. Here's Steve, that kind of reminds me of the greatest wealth destruction of all times, that thing called Clean Tech 1.0, right? Where like the magic was going to happen and then everything was going to be fine. Like, I just don't think we've seen it yet. And I don't think we've seen it. And like, here's what I think. I think things like cold fusion, I think the things like the low energy nuclear reactions, like those are the things for like the Bill Gates Foundation and Amazon that can throw $100 million just to see if they can work. And if it works, they can spend another $200 million getting it to a commercial grade, and then another $500 billion to get it to grid scale. And that's fine. Like, and they may waste all their money, but it won't matter because this is what they do. From a venture perspective, when I start to see stuff like that, I'm just like, not it. Like, it was those types of things that kind of killed these efforts year round. And I was talking with somebody here in town that's also looking to do another fund in the space. And they're like, they're worried. They're like, it was the greatest, wealth eraser of all time was Clean Tech 1.0.
Yeah, Bill Duffy said he had to hop, but thank you for sharing today. Which, Steve, reminds me here, everybody's welcome to turn on their camera and their microphone and join the conversation. If you have questions for Vic or insights that you want to hear about, feel free to jump in. Back to, and while we wait for others to chime in, cutting back to the correlations between fintech, financial services, and energy. How much of the value or the viewpoint that you bring from that fintech, financial services, insurtech background is integrated into energy? Like, is there fintech play within this? Is part of energy's inefficiency the transfer or like storage of payment and value within different capacities?
let me give you a really good example. So, rooftop solar can be a great thing, right? And it's a meaningful investment people have to make, whether it's homeowners or commercial, and it's got its place for sure. But let's think about like everyone else. They're like, well, what, can I get a warranty that it's actually going to perform based on what it's supposed to do? Can I get a performance warranty on that? Can I get some insurance on that? So there's a company one of my partners invested in that I'm helping out with called Omnidian. And so they've got a performance guarantee that you can buy to go along with your solar panels, that it's actually going to do what it's intended to do, right? And, so there's that type of intersection. So I'm like, great, technology sounds great. Let me look at the actuarial tables. Let me look at the underwriting guidelines, and let's go deep in there to make sure it works. And then let's bring in the folks from the power companies to see if it's really going to translate to meaningful energy increases and efficiencies. Similar to on the gas side, there's plenty of these robotics that are out there around like in-pipe diagnostics, whether it's for maintenance or whether it's for maintenance / safety, whether it's around the efficiencies of what's going on there and kind of the at the end of the day, like the cleanness of the fuel that's in there. And that's great because we're laying new pipes and we're putting new infrastructure in, but everyone wants to ensure that as well. I'm like, okay, let's take that data and put it into an underwriting model and really drill on that underwriting model to see what's there. So it's kind of the combination of the energy engineers and the insurance folks and the actuary folks, and then the people with inside the industry companies as well, or energy companies as well, to really understand and make sure these models are right. And Mike, it's kind of like that, like the fintech 1.0 a little bit. Like remember where everybody's like really heavy on the tech, but a little light on the fan, and I were like, stop! Like this is going to end bad. Like you're starting to see people get out of that within energy tech. Like you're taking super smart machine learning and artificial intelligence folks and combining with someone that's been running like the P&L for a local distribution company or a small electric utility for the last 10 years to make sure they've got the right balance.
Yeah. I mean, that's a great analogy. I mean, so it almost sounds like 100% correlation, everything you were talking about there. I just hear you're de-risking these great ideas in the energy field by deploying the financial services background that you have. And nobody remembers the name of the guy that discovered the first gold nugget in the gold rush. But everybody knows Wells Fargo and Levi's. Those are the real people that commercialized that movement 200 years ago. Those same business people, like you're bringing that commercialization to good ideas to actually bringing them through fruition by de-risking those good ideas with bringing like real numbers to it. That was a great example. Does that play into almost every deal you're looking at? Like how you can take that commercial aspect of like the actuarial science and how to de-risk those types of deals?
Yeah, I mean, I think there's some element in all of it because it's like, like what we saw in financial services, draw the parallel again, like just because something is a great idea within the utility space doesn't mean it's going to scale out to either grid scale or pipeline scale, that it's going to be good for a whole community, a whole city, a whole state, or the country, right? And so what sounds like a super interesting or innovative idea and maybe some technology with a little bit of adoption, you really got to look at it from the venture perspective / industry perspective. Like from the venture perspective, we're always looking at how big's the market for this. Yes, the market is enormous, but can it really solve at the scale it needs to solve, right? Can it really provide for, the energy requirements that this country has now, but most importantly, the energy requirements that this country is going to grow into over the next 20 years, which are going to be just mammoth, like nothing else we've ever seen.
Very cool. I don't have any other questions. If nobody else has any other questions, well, I do. Are you a basketball fan? college basketball?
No, I'm not a college basketball fan. Sorry.
Yeah, I was going to ask you your prediction. How about end of year Bitcoin price prediction? Not held, not held liable. Just curious to get other people's opinion on where crypto's going.
I think the unfortunate part of cryptocurrency and Bitcoin is that it is still subject to a lot of the hype factors that are out there. So it's like, if Jack Dorsey tweets about what he wants to do with it, Square, if Elon does more with what he wants to do for payment, like the price keeps going up and up. But I think what's going to happen is that you'll see the Coinbase public offering, which will take the price up because more people become aware and have greater access to it. So people start buying. I also think that at the same time, you're going to see a greater adoption beyond people holding it as an asset, beyond people using it as a hedge. I think what's going to happen is between the stable coins and what we're seeing with the pure digital currencies, we're going to see what I wanted to see in the very beginning, like people truly transacting with it.
Yeah.
And I think once we see the transactions, that's when things get really exciting. That's where the price is really going to pop. I joke about this, like in 2015, there was only one place in Texas that would take Bitcoin. And so I took my wife and kids out for a barbecue up in Austin. Right now, that was today's prices. That was probably like a $90,000 lunch, right? And we were like drinking Shinerbach and eating brisket, right? So like we need to get some stabilization to the price, and then we need people to transact. And I think that's what's really going to hype the price up over the coming months, end of the year. I would not be surprised, if we touch 70,000, that wouldn't be surprising to me. And it's kind of like everything else. Like, one of the first guys I talked about this was Mickey Nauka at Ribbit. And he's like, Vic, this could be the most exciting and the most valuable thing in the world, or it could be nothing. But the good news is we're going to find out.
Yeah.
We
will find out.
Yeah.
Very cool.
Got to understand that.
Well, I can't thank you. I could sit here and talk to you for hours. It's been great chatting with you, Vic. Thanks for sharing the insights and, the modesty and humbleness of how you explained the transition, and just great to hear your experience, and can't thank you enough for coming on and talking with us today. Hope to see you in person here in the next month or so in Chicago. And thanks again.
Thanks everyone. Thanks for having me. I appreciate you giving me the opportunity. Thanks for everybody for sticking around. And Mike, I'm looking forward to seeing you in person.
Yep, absolutely. Thanks, Vic. Thanks, everybody. See you next Thursday.
Yep. Bye-bye.
Bye.